Now, Indonesian bonds, the best performance in Asia this year, have been handing investors a handsome yield. But now the party may be over. For a closer look, I'm joined by Katrina Nicholas, the bond girl, so to speak. What does it look like the bond rally may fizzle out?
Yeah, well, look, like you said, bonds in Indonesia have been delivering some of the best returns in Asia this year. 5-year bonds are yielding about 9.4%, and yields on 10-year bonds are around the 10.3% mark. But that rally may be coming to an end, basically because Indonesia is recovering from the global economic downturn. The central bank, when it meets in a couple of hours, is widely expected to keep rates on hold at 6.5%. Now, if it does that, that would signal the end to the longest round of rate cuts Indonesia has had since 2007. There are a few reasons for this. One is consumer price rises are going up, or tipped to go up, at about 5% next year. Now, they went up at about 2.75% in August, so roughly double. And of course, as inflation becomes more of a threat, economists are going to start calling for rate rises, which reduces the attractiveness of bonds. The other issue in Indonesia playing on yields is supply. You remember last week, or earlier this week actually, we were talking about Japan and the fact that the new government there may increase the supply of debt and sell bonds to finance its fiscal stimulus promises that were made in the election, and that would cause bond yields to rise. In Indonesia, there's the opposite. Basically, the government there has sold 87% of the bonds that it said it will sell, so there aren't those supply pressures in Indonesia anymore.
Okay, I want to talk about Japan. You talk about Japan. Samurai bonds, we've had big names, the likes of Walmart. I mean, what's happening?
Yeah, well, just samurai bonds, just in case our viewers don't know, they're basically bonds denominated in yen sold by overseas borrowers in Japan. And the reason why we've had some really big names like Walmart start to get into this market is essentially cost. The Bank of Japan slashed interest rates there to deal with the economic crisis, and they're down at 0.1%, which is where they've been ever since last December. And basically, you know, Walmart was paying 1.49% interest on its samurai bonds that it sold in July. That compares to 3.2% interest it had to pay when it sold US dollar notes in May. So, you know, it's getting away with a much cheaper rate of borrowing.
Okay, stay put, stay with me. Let's talk samurai bonds. Back in the spotlight a year after sales dried up following the Lehman collapse. They have rallied for a 5th month in August, the longest winning streak on record. What are the prospects? For more on the outlook for samurai bonds and global credit markets, let's bring in our guest, Harry Ishihara, a senior credit analyst at Mizuho Securities in Tokyo. Harry, your thoughts on that? What's really behind this rally, and is it sustainable?
Right. Well, the investor base in Japan is very broad. Depending on the name, sector, and credit, you can have insurers, asset managers, pension funds, central co-ops, and regional banks and Shinkin banks all piling into good names. According to the OECD, Japan's institutional investor base is the 2nd largest in the world. And it's very much buy and hold, which is very good for the issuers. You don't want, as an issuer, you don't want the investors to shoot the bonds back at you in 2 weeks' time to take profits. On the other hand, Japanese banks are very traditional banks. They take deposits and make loans. But the trouble is that loans have been shrinking. Since the mid-90s, the loan market has shrunk from about 800 trillion yen to about 500 trillion yen. So that's about 8 trillion US to about 5 trillion US. And that's a big drop. And so there's nowhere to place those deposits. So they are buying samurai bonds and any other credits that they can buy.
Harry, it's Katrina Nicholas here in the Singapore studio. Hi. I'm interested, what are your predictions for samurai returns this year? They lost about 6.8% last year, and they've already returned 0.8% this year, which is broadly in line with what they returned in 2007. What are your thoughts for what we might see for the full year, perhaps?
Right. Well, we are telling our investors that to brace themselves for some volatility going forward. Japanese samurai bond spreads usually follow global credit spreads. So if there's volatility overseas, there's volatility in samurais. We are not so confident on the economy. We're very bearish on the economy. And looking forward for some downgrades as well overall. So we are asking them to brace for some volatility.
Harry, if the yields on these samurai bonds come down much further, I'm wondering, is there a risk investors will become less interested and go for other types of securities?
Yeah, that usually does happen, but the trouble is the Japanese domestic corporate bond market, the growth there has been stagnant for over 6 years, maybe negative growth to single-digit growth. So that means the bond market has been, the domestic corporate bond market, this is the Tokyo Electric Power sort of names, has been shrinking. And so that means that money has to be parked elsewhere, and it goes either into JGBs or into Summaries. So there is this very strong underlying bid there.
Harry Ishihara, thank you for your assessment today. But before we let you go, Harry, what do you make of Japan's bid for the Olympics? I mean, we know that lots of posters are all over Tokyo. Do you think Japan has a chance?
Yeah, I think they're trying very hard for that. It will be very good for the economy and good for Japan overall, I think.
Well, remember, Chicago has Obama behind it. Harry, thank you so much for joining us today.